Welcome to this Bell Direct monthly update. I'm Julia Lee, an equity strategist at Bell Direct. And for the month of September, we did see the market trading down lower with a fall of around about 2%. And there wasn't a huge difference between the major indices, with the top 20, the top 200, the mid-cap and the small-cap indices all returning similar results. In terms of sectors though, there was only 3 sectors which managed a gain in the month of September. That included energy, materials as well as communications. But the worst was healthcare, down by 7.9%, discretionary, which was down by 5.2%, and utilities down by 3.7%. Having a look at the best and the worst performers in the top 200, and the best was Northern Star by 22% for the month. South 32 also doing well at a 12.5% gain, and surprisingly Vocus up in the top, up 11.8%. But the worst was Lynas, down 27% as it saw another government inquiry into its processing plant down in Malaysia, and Estia Health down by 22% on the back of a royal commission being called on the aged healthcare sector, and finally Blackmore was down by 17%. Just having a look at aged care and the Royal Commission that has been called, and the focus will be on 3 areas for investors. The first is quality, the second is framework, and the third is funding. In terms of quality of care, this comes from increasing education, audits and ratios, all things that cost money. The main one for the industry would be the staff to resident ratios, and if they are to come into force, that would be a substantial expense for the industry. At the moment, Japara has the highest employee expense as a percentage of revenues and per place, followed by Regis and then Estia. In terms of framework, the aged care quality standards will be set into law in 2018 and monitored from the 1st of July 2019. But funding is also important. The government will need to balance increased costs with the needed increased capital investment into the sector, and the market will be watching to see whether funding will be increased into the aged care sector. Of course, with a loss for the month of September, the market focusing in on possible turning signs that this secular bull market may be coming to an end. And usually from an economic standpoint, this is when we move from rising inflation and rising growth, which is great news for the equity markets, to rising inflation and slowing growth. And that's why things like the trade wars are so important to market performance. We're also watching to see whether peak earnings growth has already passed, especially in the US, which has been a key driver of global share market performance. We also look at things like number of companies participating in the rise decreasing, but at the moment we are seeing the US market continuing to hit new highs. Some other things which are a little bit more difficult to time include the yield curve flattening, market breadth narrowing, the move from growth to value, and growth looking to move below trend. However, the market is not under stress yet. In fact, just having a look at the ASX 200 volatility index, generally as this chart shows, when we have low numbers of volatility, so low volatility, the market tends to grind higher. And at the moment we have low volatility. The XVI, or the ASX 200 VIX index, at just 11.1. It did reach a high earlier this year at a reading of 24 in February, and compared to the global financial crisis, that's nothing because we reached a high of 66 in that index. At the moment, no sign of stress in terms of the market. But looking ahead, October, it looks like we may be treading water, and the big event in the next couple of months will be the midterm elections in the US early November, which we'll be watching very closely, as that should impact on the timing of potential talks between trade partners, especially watching the US and China. I'm Julia Lee, an equity strategist at Bell Direct. Hope to see you next time.